Hello, and welcome to our second Startup Canada Equal Slice webinar of 2026, Accessing Funding, Grants, Loans, and Non-Dilutive Capital. I'm Wise Big, Programs Manager at Startup Canada. To begin, I would like to acknowledge that the land on which I'm on today in Oakville is located on the treaty lands and territory of the Mississaugas of the Credit First Nation. I thank them, the treaty holders, for being stewards of this traditional territory. As we are a national organization, I would also like to acknowledge with respect the diverse histories and cultures of all Indigenous peoples. I encourage you to take a moment to acknowledge the traditional territory that you are residing on today. Today's session is being recorded and will be added to our YouTube channel afterwards as a living resource. We welcome you to connect with each other in the chat. If you want to share any relevant resources, your LinkedIn profiles to connect with the attendees in the call today, or anything in general, feel free to use the chat. And please make sure that you are sending your messages to everyone in the room. Startup Canada is a national nonprofit that is the gateway to Canada's entrepreneurial ecosystem. We're here to connect entrepreneurs with the support, community, and tools they need to build a successful business in Canada. Startup Canada and Pizza Hut have joined forces to empower entrepreneurs by providing access to funding, educational webinars, and business resources that help break down systemic barriers. With the belief that everyone deserves an equal opportunity to succeed, the Startup Canada Equal Slice program offers pitch competitions, educational support, and tailored business tools to help entrepreneurs grow and scale their ventures. Before we get started, I'd like to introduce Hannah White, Head of People Canada at Pizza Hut Equal Slice, to say a few words about our partnership. So over to you, Hannah.
Thanks, guys. So excited to see you guys all on today's call. And today's topic, just such an important one. We know funding is one of the biggest barriers that entrepreneurs face, especially early startup. So thank you. So many great speakers will join us today. So huge thank you to Rachel, Stephanie, and Thierry for joining us and sharing a little bit about your wisdom and your own journeys with your businesses. So just appreciate the time that you'll spend with all our webinar attendees. But I'm Hannah White. I'm head of people of Pizza Hut Canada. And so many times when we're on these calls or our program sponsoring these webinars, people are like, what is Pizza Hut doing, supporting in the entrepreneur space? How are you guys sort of with Startup Canada, asking us all types of questions whenever we're live in person too. So I like to share a little bit about our brand history, just to sort of share a little bit more about our Equal Slice program. But Equal Slice all started just based on our brand's DNA and our story. So in 1958, the Carney brothers borrowed $600 from their mom to open up their very first Pizza Hut location. And so what started as this small business idea grew into this global brand that it is today. And across the globe, there's many variations of our Equal Slice program. But here in Canada, it truly is all about sponsoring entrepreneurs and that idea that we're paying it forward. So today we have over 650 restaurants across Canada, and they're all owned and operated by franchisees. So we know firsthand what it takes to sort of run businesses across Canada. And our role at the Restaurant Support Center is really partnering day to day with our franchisees to help them run successful restaurants. And so this is truly what inspired us to sort of start our Equal Slice program. And we're headed into our sixth year. So our second year in partnership with Startup Canada, but we've given out over $600,000 in grants over the last 6 years, which just been amazing. And one of the ways that we open up the doors to provide funding for entrepreneurs. So we're just really excited for you guys to get access to this education today. I think that's one thing that we've really focused on in our program is not only giving out grants, but also opening the doors for continuous learning. We know oftentimes when you're in the entrepreneur space, different than a corporation, you don't have access to sort of get in. Continuous development is so important. So that's what today is all about. Really excited to hear the stories of all of our guest speakers today. So thank you so much for spending the time with us. We know it takes a lot to step out of your day-to-day and your businesses and take the time out to join webinars like this. So looking forward to jumping into it. Thanks, guys.
Amazing. Thank you so much, Anna, for sharing more about how Pizza Hut supports entrepreneurs. So today's webinar will help you discover that equity isn't the only way to fuel your business. Canada offers a robust landscape of non-dilutive funding, and this webinar will break down the landscape of grants, loans, and non-dilutive capital available to Canadian entrepreneurs. Um, and gives you the tools to find, assess, and apply for the opportunities that are right for your business. We have prepared questions for our panelists, but if you have a question, please write it into the Q&A box on the bottom function bar on your screen, and we'll do our best to have it answered live for you. So now, without further ado, I'm honored to introduce our speakers today, Thierry Lindor, co-founder Happly.ai, Rachel Bartholomew, founder and CEO of Hyivy Health, and Stephanie Sang, CEO and brand angel at Granted Consulting. To help set up our conversation, Rachel, Thierry, and Stephanie have prepared a short presentation to provide some background on their expertise on this topic and their own experience while navigating the non-dilutive funding space. So first off, I'll pass it over to Rachel for her short presentation. So over to you, Rachel.
Awesome. Thanks so much. Thanks for having me here, guys. And I'm gonna start my timer so I stay on time. So yeah, I am here to talk a little bit about the nitty-gritty of funding your startup. And I come at this with everybody as someone who is literally at your stage, dealing with this as you all are also dealing with this. So I wanted to share my knowledge, and to give you some context. So, as Hyivy, we are a medical device company. We are fully, dove into the deep tech world with, different types of science and clinical trials and all these things that we need. So, grant funding is a huge part of our success and our numbers and is super, super important. So, just some context, we've been about 6 years on the ground. We have utilized all sorts of different types of funding. So grants, loans, wage subsidies, pitch winnings, government refunds, etc. Our most used is Shred. We use a lot of wage subsidies, the Skills Development Fund, and some loans. And we've done a total of 3.6 million in non-dilutive funding. We also have done equity, so we usually match our non-dilutive with our equity funding. So we've raised a total of about 8 million. We so here's a little bit of my success rate. So we've been funded about 83 funding instances, give or take. We've applied to about 163. We've done about 95 programs or funding accepted and completed. So we have about a 60% success rate, and that's what I normally see with a lot of other companies as well. So I'm going to fly through this. If any of this you want to chat about further, I'm super happy to. There's a lot of content here. I'm just going to dump on you all, and hopefully there's some little nuggets that then we can kind of noodle on later on. But essentially, there's tons of ways you can fund your business, right? I'm going to focus on the first six, which is bootstrapping, friends and family, pitch competitions, accelerators, incubators, grants, and in-kind incentives. So, okay, starting out, bootstrapping. Everybody says bootstrap. You gotta start it out and really just, show that you have your skin in the game. I know it's hard to achieve. Like, not all of us have deep savings. I know I'm a millennial, and like millennials, we have what, $25 in our savings account. So I totally understand and get that this sometimes is the hardest to do. I think one of the things that you can really do is bring in multiple founders as a buy-in at first. So if you are not technical, but you're a business person, bring in somebody who's technical who can help you kind of get in and get going and bring in the valuable content that you need to get to the first stage to be able to apply for a grant. This can be really avoided by exchanging that equity with co-founders as kind of payment to get into kind of that first bit of grit that you need in order to be able to, get your first grants, right? But investors are really going to look for this as showcasing you have a vested interest in the company and that you are contributing your time and resources to this. The next is friends and family, and friends and family is tough. I have been in this industry for 20 plus years now, and I've seen this always go horribly wrong. I think if this is going to be the way you go with family or friends, it is super tough to draw a boundary between your family and friends and that relationship and a business relationship. If you're going to do this in a loan format, not an equity. Do not have them actively involved in your operations, and make sure you draft up proper legal documentation that really just helps avoid conflict, long term. And so this is went well for me, but that's because I did a very legal process with it and not loose terms because it is a friend or family, and really put that boundary in place. Pitch competitions is something we hear about all the time in Canada, right? Long story short, please try to find motivation beyond the money, whether it's the network or the exposure, the feedback. Get out of the local politics and go global. Find your niche pitch competitions within your industry. Um, COVID has a lot of these going virtual. Some of that has perks, some of it has downfalls. Overall, they're extremely competitive, and sometimes they're even political slash bias. So just know, once again, try to find that motivation beyond the money, because it's not guaranteed. What pitch competitions are looking for? They're looking for a great team. They're looking for a good problem solution fit. They're looking for a go-to-market and market size. And we hear this billion-dollar number. Make sure that you have that. If you are a consumer product or a software product, it is expected that you will have traction. If you are a high-tech project like myself, it is expected that you have a bunch of advisors that are stacked and really good IP strategy. So look at this, make sure that you have this if you're going into pitch competitions. How to prepare? They all follow the same format, right? Practice like crazy, get comfortable in front of people. You can use your Q&A strategically. So leave content out that will allow judges to go, hey, they forgot this. And you know exactly what question they're going to ask you. And prepare your 3, 5, and 10 and 15-minute pitches, what those look like. 3 minutes, kindergarten level, simplified, one sentence per slide. Make sure you're not spending it all on the problem. Here's the content: problem, solution, uniqueness, competition, market, business model, team, traction, ask. That's what the 3 minute is going to be. The 5 minute builds on the 3 minute. So that goes into more of the go-to-market and use case. The 10 minute is usually more for investor panels. That's adding in financials and marketing, execution plan, that type of thing. And then 15 minutes is really going into deep dive with an investor. So that's going into traction, more financial details, etc. So this is the format to follow if you're going to go through the pitch competition side. And really, pitching wise, hit the senses, practice, don't rush like I am right now, trying to get through 10 minutes of content. Understand your audience. Make sure you're not just talking all this scientific jargon or these things that the audience is not going to connect with. And really break through the noise. Lead with your story and your why. I think that's a huge piece that gets through. Incubators and accelerators. So a lot of this is heavily technology focused. So if you guys are in consumer, it is a little bit tougher to go this direction. They're usually nonprofit or social based, nonprofit and social based programming is starting to open up. So you're starting to see more incubators in that space. But know that this is either equity based or time commitment based. Sometimes money is included. But it's mostly mentorship, right? So use it for the network and the community that it gives you and the credits that it can give you. But know that sometimes this is going to be worth more time than what it's actually worth. I have actually fired incubators in the past. Know that you can do that if it's taking your time. Watch out for scams. There are some scams out there, ones that will take your money and not give you the value back. So just be wary of these. Grants. So these take a lot of time. They're cyclical. So know that the government cycles on an April cycle, so not the end of year cycle. This is a great way to get your startup operations funded. Make sure to keep your books and reporting in order. A lot of these applications follow a similar format. So what I do is keep copies of applications with the dates so I can copy and paste them over. And this is the great way to get your hypothesis tested before you go out for equity-based financing like investors. Usually there's no money up front. So please know that grants, you usually have to pay first to get reimbursed later. So money does have to come from somewhere, whether it is investors, whether it is friends and family, bootstrapping, that type of thing. Make sure you have the fine print in the agreements and you've looked that over. And there are some entities now that can help you fund grants upfront as a loan so that you do have that money up front. So just, have that in the back of your mind. There's things like swoop funding that does that. Federal are usually the larger grants and they usually require revenue. So if it is federal, you can kind of rethink it. Provincial is usually where a lot of us will go, and it's most accessible for some of those larger R&D pools. Municipal are more of the smaller grants that help you get off the ground, 5K here and there. So that's just kind of how they break down and how they kind of triage up. Shred is amazing. It's a huge win for Canada. It recently got better. Use a consultant at first, and then you can start to try it alone. I know that they cost money, but it is worth it so you can avoid that first audit. They all have different audit rates, so be careful about that. I'm at 10 minutes, so I'll wrap up quickly. Prepare to be audited on your first filings or after five filings, and really track your hours and track your materials and consultants. Invest in your R&D before your commercial, and be careful of double dipping this with your other grants and that type of thing. Keep your numbers in order, what they care about, number of jobs, revenue and commercial product, IP, the funding that you raised, and spending within Canada. So just know that. Um, I will leave the rest of the slides because I'm at time, and happy to share this further. This is a lot of just resources. So some of the commonly asked questions in grants. There's some stuff about loans, getting ready for investors, what makes a company fundable in a grant setting, and some tactical resources that I use. So these are things that I'm happy to share as a resource later. Pocketed is a great one. This Week in Startups Slack. Delium is amazing. If you don't have a profile, make one so you could submit quickly, and a couple of documents for your arsenal. So thanks so much, guys.
Amazing. Thank you so much, Rachel. There was so much advice there. So I hope that the audience really appreciated your insights. I will now pass it over to Thierry for his presentation. So over to you, Thierry.
Hi, everybody. Hope everyone's doing good. I'm just gonna share my screen. Sorry. Right. Share my desktop. Can everybody see my screen? Yeah.
Yep, we can see it.
All right. So today I'm going to do a couple of things. I'm going to present what we do at Happly, and more importantly, I'm going to dive into a pitch. I think pitching is also something that is very important, especially in the context of non-dilutive funding. So I will dive into this and explain why it is so important, even in the non-dilutive space. First and foremost, I'll present what we do at Happly and answer a couple of the questions in the process. Give me a thumbs up, actually, if you think that entrepreneurs need funding to start or scale their business. Thumbs up, emoji, anything will do at this point, right? Yeah, of course. Of course, entrepreneurs need funding. Now, what if I told you that 97% of them do not start or scale their businesses? That's researchers, startups, scale-ups with non-dilutive funding. But can we blame them? Because the system is actually made like this, right? On one side, you got people looking for money. And on the other side, you have money looking for people. And the people on the demand side is you, me, researchers, artists, nonprofits, Pizza Hut franchisees. People on the demand side are looking to access non-dilutive funding. The other side, you got the public and private sectors unlocking trillions of dollars. And I won't go over all the stuff that was named before, but I will add procurements to non-dilutive funding. B2B is cool, but B2G is where there's a lot of wealth and opportunities, especially when it comes to striking key partnerships. Now, at Happly, we believe we have a solution. We created an AI-powered platform that helps you match, apply, and qualify for funding based on your unique profile. Actually, BetaKit called us an economic Tinder for innovators. And guess what? I see y'all smiling. We agree, except we don't match you with potential stalkers, match you with potential dollars. But the matching is not where the magic happened. It's actually how we leverage specific segments of AI, namely OCR and NLP, to help you match, apply, and qualify. but we're patent pending on a one-click apply that actually fetches all the information on your profile once you've matched with the proper funding, and then auto-populates any application process instantly. That has created $90 million of landed non-dilutive funding for our 84,000 users. And we're proud to say we created an anticipatory texting tool that's kind of like Grammarly, but instead of correcting for grammar mistakes, it corrects and anticipates grant writing mistakes, procurement mistakes, wage subsidies. Now let's dive into a key case study. Workine, Farnell, great entrepreneur using our platform, landed $650,000. What does that look like? Through our platform, we produce what's called a 999. And that stands for 9 days, a quick audit, leveraging our technology to see where you are at and what you need to do in the next 9 weeks to land proper funding that helps you propel you into the next 9 months. And that's obviously through the platform. And we run the platform on ourselves, namely on me. That's why I've been able to land close to $2 million in non-dilutive funding in the past 3 years. We are completely bootstrapped because of the non-dilutive funding strategy. And I've won probably close to $1 million in pitch competition, one of which was with Startup Canada at US Ambassador Cohen's office. Now, here's why non-dilutive funding matters. All the companies that you see here, trillion-dollar companies, big tech, oh my God, they're going into space. They are all heavily subsidized. Show me a company that works anywhere in North America in the G20. I'll show you a company that uses your tax-paying dollars and private sector dollars to scale because it's smart. Now, what's non-dilutive funding? Because we're jumping into this. Dilutive is you give piece of the pies, angel investors, VC, so on and so forth. Non-dilutive funding is you keep the whole pie. Preferably, my favorite, meat lover at Pizza Hut. All right. Now, what is non-dilutive funding? We talked about it. Government, grant, accelerating career. I'm not going to recycle that information. One of the big ones that we talked about was SHRED. You also have to be careful with SHRED because it's something where you spend the money first and you get reimbursed. That is called retroactive, right? Instead of proactive. Two types of non-dilutive funding, two totally different strategies, and some are way more complicated than others. We talked about in the previous presentation, audit. Be ready to get audited. You're going to be audited on the business side and on the tech side. Technical uncertainties and benefits to Canada is all that the federal government cares when it comes to SHRED. Can export innovation is a great example of proactive funding, not reactive funding, meaning you get the money up front, not can export SME. Can export SME is to export your ideas, your concept, and so on and so forth. Can export innovation can go up to 75% of all your spending regarding a specific project, but you have to have a partner in R&D in the country that you wish to export for. We'll take us as an example. We just landed last year one for Congo, and now we're going to Italy with another partner. Wage subsidies, super important. I hope I have time later. I'm already on time to dive on this, but I have an amazing strategy to go from 0 grants, your first ever, all the way to fast track. And then CA, CED lending, the TELUS grant is another one. Consider your funding goals, the objectives of the actual funder. You should know the Q&A, you should know the objective, and what is politically trendy. For example, right now at Can Export, Indo-Pacific investments are prioritized. Defense tech are actually prioritized. So you also have to know these things. If you want more information or anything, follow us on LinkedIn and definitely take a picture of the screenshot, the QR code, and let's book a meeting. Thank you.
Amazing. Thank you so much, Thierry, for sharing more about Happly.ai. We'll definitely dive into some of the points that you mentioned in the panel discussion, but thank you for your presentation. And last but not least, over to Stephanie for her presentation. So over to you.
Thanks, Amy. Thank you. All right. Well, I'm following 2 very good speakers who have given everybody a good synopsis of different types of ways of accessing non-dilutive funding. We've been at Granted around for 15 years. So we have experience in applying for numerous grants. We've done over 20,000 applications at a success rate of over 92%. And so I'm going to go through actually something a little bit different because I think a lot of the programs that Rachel might have used, some of them are probably more tech focused. Thierry mentioned a range of different programs, a lot to do with innovation. I'm going to go down to the bare bones of like, if you're a mom pop shop in or a startup that's in service, or maybe a business that isn't technically advanced in the way that you're developing your products or services, how are you going to access funding? Because I'm going to say that's probably 80% of the businesses in Canada, and it's probably applicable to some of you today. So these are things I'm going to go through. I think the first big misconception is that there's a ton of grant funding. You know, I'm a female entrepreneur, visible minority, as you could see. And when I started the business, I was considered a youth in Canada. And so definitely a lot of friends and family said, oh, there must be just a bucket of gold available for you. And that's not quite the case. I think the only exception that I've seen, grant specifically, there have been a few women grants, and you know those are typically not programs that are run by government. But there's there's definitely a lot of funding for Indigenous entrepreneurs as well as necessary and as rightfully so. But there isn't this like, oh, you're a youth or you're a this or that. I think it's more on the loan side than it is on the grant side of things. So there's always different rules and exceptions. I will say, though, that equity deserving is important to indicate on your application because you might get bonus points for it. But to say that it's because I look like this or I am like this and I get funding other than Indigenous community members, of course, would be a little bit of a misunderstanding. The second thing is a lot of companies come to us and they ask about startup funding for, you know, they need lease or they need leasehold improvements or they need to buy equipment for the restaurant or for their car repair shop. And I would point more towards loans than to grants for something like that. There's a range of different programs that will be mentioned in the Q&A a little bit later on as well. Funds to start a business. So Rachel mentioned this, you know, municipally, there might be some smaller programs, $3,000 to $5,000. Just keep in mind, what does that actually pay for when it comes to starting a business? Is very little. But at the same time, they're just not, you know, tens of hundreds of $1,000s specifically for what we call early stage or really true startup businesses. So been around for less than a year, you know, just starting out their business. There are programs that you could qualify for, but nothing specifically to say, hey, you're a startup, let me give you some funding. And this was mentioned a little bit earlier, making sure that you do have the cash up front. The government are stewards of your taxpayer dollars. We're all taxpayers on this call today. And so it's important that they're not just, you know, dumping a dollar amount, $100,000 to a company without really understanding if they're actually paying for the things that they applied for. So this is part of the reason that there is this check and balancing with government programs. So where is the money? And I think that this is a good slide to kind of take a look and see where would you potentially find dollars as your business grows. Definitely on the hiring side, you heard terms like wage subsidy, so offsetting the costs of new hires and creating employment here in Canada. There's opportunities there. I'm going to say a large part of those are for youth and for those who are potentially students as well. And then training dollars. So upskilling your existing staff members, depending on where you are in Canada, you might even be able to get funding to upskill yourself. So this is not like using these funds to pay for your kids' MBA program. This is third-party delivered training that will help your business propel and ensure that you are able to deliver the services to the needs of Canadians. Market expansion, you know, some of these are for you to capture market share outside of Canada. Often I will hear companies come to me and say, hey, we're moving from, you know, or expanding from Vancouver to Toronto. Where is there grant funding available for that? The reality of it is the government is not keen on saying, let me create additional competition in different parts of Canada, but what they will fund are companies who are looking to capture market share outside of the country. And so definitely look into the opportunities there. Again, less for startup, more for companies that are a little bit more established. So been around for at least 2 or 3 years and hit a certain revenue threshold. More recently, there have been different, you know, Thierry said flavor of the government or flavor, what are the trends? And definitely tariffs has been a big impact on Canadian businesses. Again, in order for you to apply for these, you need to have been impacted by tariffs and show and indicate that you actually have a drop in revenues. There's other things like defense that was mentioned earlier. So mining, natural resources, you know, there's any of these types of priorities that the government has put out. Those are things to take a look at if you are in that industry and to be able to leverage those. I would say the biggest bucket of dollars for sure is in R&D. And so making sure that you're taking a look at those funding programs, including tax credits, and the sustainability remains an area that the Canadian government continues to fund. So I'm not going to go through every box here, but just making sure that you understand there are prerequisites for applying for grants. And it's not just like you put together a pretty application, that's all you need. Making sure that you are looking at all of these areas, particularly I'll point out capacity. You know, if you're a one-person business and you want to hire 6 people, you go and apply, you might get it, but how are you going to actually be able to manage everybody and provide them with the training that they need? And then deliverables is a key area for you to be able to apply successfully a second time. So let's say you get funding and you were expected to meet this criteria, or you indicated that you're going to create this number of jobs or increase revenues, and then coming around the second round, they say, how did you do? And everything is a 0. That may impact your ability to successfully apply. So finding grants, we were probably one of the earlier stage businesses back in 2018, developing a tech that matches grants to businesses. So we've got, almost 10 years of experience in developing tech that matches businesses to the right grants. We have our own AI version of this. What's different, or maybe unique about how we've approached it, is we've actually leveraged our database of the last 15 years. And so I would say that we probably have one of the largest non-government databases of applications that we are able to draw similarities from, see what the patterns are, identify things like how our team is able to work in businesses, and curate the right types of grants, as well as be able to have you track kind of where you are in the stage of application. So there's a couple of QR codes. You, I believe, will get a copy of this presentation. And so feel free to go in there. We've developed a grant calculator. This was created in 2018. And it will just give you a summary of the, approximate amount of grant funding that your business may qualify for. It's totally free. I invite all of you to go in there, check out what that is. Every business is a little bit different. And even in the stage of business that you're at, maybe you go to the grant calculator this year and it returns a number, and then you come back 6 months later and it would potentially return a different number because the grants have changed and the dollar amounts are also different. So check us out, and looking forward to contributing to the next part of this webinar. Thank you.
Awesome. Thanks so much, Stephanie. And with that, we will now move on to the panel discussion portion of the conversation. Our moderator for this discussion is Isabel Nolan, Director of Programs at Startup Canada. So over to you, Isabel.
Wonderful. Thank you so much, Wise, and thank you so much, Stephanie, Thierry, and Rachel, for putting together those presentations. You each did such a fantastic job at, going through what it really means to find the grants, applying for them, and what the best considerations are for going through non-dilutive funding. So really to summarize that for our attendees, because there's a lot of knowledge that was just thrown at you, and we will go more deep into everything. But really, we really need to set the expectations when it comes to non-dilutive funding. This this funding is not free money. I've heard that term thrown around a few times in the past, but it really is a strategic discipline. And it's almost always milestone driven, highly competitive, and largely reimbursement based, as has been mentioned. And you're really being forced to kind of look at the bigger picture. And as Stephanie mentioned, one of the biggest traps founders might fall into is putting themselves into a singular box. For example, looking for gender specific only grants. And while those dedicated pools are I suppose vital, but yeah, they really only represent that tiny fraction of the billions of dollars that are available. And I guess another great point that's been made is the government is very much concerned about what your business is doing and what the outcomes will be for Canada, and what's the return on investment for them to give you this funding as well. So we're gonna move on to, talking about all the different available non-dilutive funding today, grants, strategic loans, wage subsidies, so that you can really buy the most valuable asset for your business, which is time, I think. So, Rachel, I want to kick it off with you first. And so you shared some fantastic numbers. I think it was around
$3.6 million dollars. No, I think it's even higher. I think you said around eight or so. Yeah.
Yeah, it was eight total with not non-dilutive though. So I did kind of half and half,
Yeah.
non-dilutive and dilutive. Yeah.
And so incredible like amount of funding instances and 160 something applications as
Yeah.
well.
Yeah.
Could you please break down like the types of funding that you sought out early on versus later?
Yeah.
And were those years like primarily small grants, pitch competitions,
Yeah.
and when did you make that transition into those larger funding pools?
Yeah, it was definitely a lot of pitch competitions kind of early on. And I think part of that is really like getting the feedback from people, right? You get feedback as you go through pitch competitions, and that feedback can be used to iterate and build on your business.
Mhm.
And so that was super helpful for us. And I see Alberto has a similar kind of question of like, where do you start? And I think you just go. Like I think just start applying and see what clicks and what doesn't. It doesn't mean that you cannot reapply later on to anything. And I think I strongly encourage that. But just start going. I think it's like start small, start with the smaller grants, and that's what we did. And pitch competitions, learn, build, iterate, get the feedback, get as much negative feedback as you can, so that you can iterate on that and continue forward.
Excellent, great. And I think I just saw someone announce in the chat that they just received some funding today. So that is fantastic to hear. So congrats
Amazing.
to that entrepreneur. And can you tell me about like your when felt right to transition into those larger um funding pools and loans in your
Yeah.
journey?
I think for us, we really started looking at some of the bigger pots of money as we started to have like prototypes in place and um, some staff on hand and some more of that track record of like development that has happened. And so really getting some of that in place. I just saw an anonymous attendee ask about protecting IP. So one of the things that we did was we paid out of pocket for our IP right up front, right as soon as we started, so that we actually had patents going into some of those first grants, which was a super big piece for us to get some of those grants early on. So I would say, we started probably looking at the larger grants probably 6 to 8 months into development. But also, just a quick caveat to that, it was right in the thick of COVID. So the funding landscape was a lot different. And a lot of people were kind of scrambling to get money out or, iterate on how their money would be used. So, yeah.
No, brilliant. Yeah, thank you. I see someone has their hand up, Sandy. So if you'd like to ask a question, if you can put it into the Q&A box and I'll collect all the questions there and I'll ask them throughout the session. So Thierry and Stephanie, you're both working with helping founders navigate exactly what Rachel has done. So when it comes to when a founder comes to you with a story like hers or with dozens of applications, mixed wins and rejections, how much of what you do is strategy versus simply helping them to stay organized and persistent? Stephanie, I'll go to you first.
Yeah, it's really interesting because when we've kicked off this tech, it was just before COVID had hit. And so my assumption was like, hey, we've got all our knowledge in this database, just go, right? And you should be able to do it on your own. And we had to modify kind of our options because people wanted to speak to humans and they wanted to just make sure that there was a strategy that they could leverage and understanding how we would approach funding. And so, we come from a consulting background. And so we're very used to companies, coming to us and asking us these questions. And I think that the strategy is definitely a big component of making sure that you're not running after the wrong grant funding, and rather you are chasing something or applying or preparing for a grant application based on the needs of your business. And I think that that is really key. I've heard of many businesses who have been taken off track because they chase the wrong thing. And so, yeah, the money might be there, but if that's not part of your business goal, then it's probably not the best program for you.
Hmm. And Thierry, your thoughts on that?
Yeah, actually, Rachel is exactly our target market as far as innovation, because being in the health tech, she could probably speak to this, but the cycles before you actually get to certain milestones of profitability are usually longer. So a lot of med tech, a lot of people in pharmaceutical are actually using and leveraging our platform for exactly that. Now, regarding the strategy, yeah, we don't come from that world at all. I have zero knowledge of this. I got into this because I had to lose and sell my house, actually my dream house, to start a business. And I was like, there has to be a better way. There just has to be. It can't be that you have to maximize your credit card, lose your house, and deplete your family savings to actually start a business. And that's how we came up with the idea. So we're a bunch of geeks that love AI and that know the power of AI, and we know that democratization to funding and making sure that people like Rachel, that are really the people changing our society in a real positive fashion, access the money. And for us, that was a barrier that needed to be tackled. So just by simple fact of the business of the medicine and medical and pharmaceutical space, that and nonprofits, also and artists, we forget that they exist as well. They need a lot of non-dilutive funding to survive, whether it's a municipal, provincial, or federal. And as far as strategy goes, we don't come from that sector, but because our 84 plus thousand users write on a daily basis, we have a community of about 300 grant writers on there. The more they write, the more they win. The data is vectorized and still anonymized, but everybody wins whenever one person wins on Happly, because then the algorithm gets better and better on your enterprise profile when you're trying to write. So the writing engine, the AI writing engine actually learns. So the more you write, the more you effectively win by correcting and iterating on previous versions. And when you don't land, it's as important as when you do land. People think, oh my God, I didn't get it. Well, when you don't get it, you should actually get better. And guess what? If you're using AI tools, logically, they are getting better as well, as long as you feed them the proper data.
Hmm. Yeah, your point around like not needing to max out credit cards or lose your house, or as Rachel said as well, like not everyone has these deep like massive savings.
Yeah.
And I think what's great about having access to these incredible grants and other supports from the Canadian government, it's making it more accessible to start a business without just bankrupting yourself. Which is why, like sessions like today are so fantastic for us to be able to talk about this and kind of, remove any sort of veil from entrepreneurs. Um, Something I suppose it's like a more of a follow-up. So Rachel said like just get started, just apply for them, and whether you get accepted or rejected, like you're going to learn something. Are there any like initial steps, Terry and Stephanie, that an entrepreneur can take in the early stages to make sure that they're setting themselves up for success when applying for grants? Stephanie, can I go to you first?
Yeah. So I think just making sure that your business is set up correctly is one of the main things that I've heard. Early stage businesses are like, oh, I'm not going to go and get my business license because it's an extra $125 to go and do that. Well, now there are applications where you have to upload your business license because they need to make sure that you are operational. Some companies are like, oh, I'm just going to pay contractors. And then when you go to apply, you realize that they need at least 3 to 5 full-time employees, and then of course you don't check that box because they're not. So I think the challenge is like there's a rub, right? There's a little bit of friction around how do you grow in as a startup and access some of these grant funding programs where there is this kind of expectation from the government. And we work on government grants, which is why, I keep referring back to government, but where they want to see some sustainability opportunities here. They don't want to be giving taxpayer dollars to a company that potentially could go under in the next 3 months. So I think making sure that that's all complete, making sure that you're in compliance also. So if you need workers' compensation, if you need liability insurance, making sure that those are in place. And then also for those who apply for grants on a regular basis, completing the grant. So maybe something happened like a COVID where you get funding and then you realize, oh, you can't go and spend this because you can't travel, etc. But just closing out those loops will make it more successful for you to be able to apply in round two, should there be an opportunity to do so.
Brilliant. Thierry, any tips for entrepreneurs getting
Yeah.
set up? Yeah.
Yeah. So for us, that's why we have a 999. Your first 9 days, what you need to set up is first you need a business plan, right? I have an idea, I have an existing business. You need a business plan. You need to be incorporated. Surprisingly, some people sometimes book us and demos, and they're not even incorporated, right? So first, you need a business plan, an idea of what you're doing, how you're going to go about doing it. Then you need, obviously, to be incorporated. It sounds stupid, but you actually need to make sure that you are properly incorporated. Then the second step is, in my opinion, and that's what we did at Happly, what is the value of your business? Or where do you think this business is going to be valued in the next 12 to 24 months? And here's why. Because once you've decided that value, like this is what I believe the value is, forget the market, forget the investors, all right? Just for now, when you're getting started, if the value is, let's say, $500,000, then you're able to allocate a real value to the equity of the shares that you would be willing to let go. And once you know that value, then you could decide if a loan is actually worth it. I'm a data guy. So for me, we went through all of this. We said, all right, this is the value of Happly today. This is going to be the value in the next 12 months. This is the value in the next 24 months. Should we raise? That's why we're still bootstrap after close to 4 years. The answer was no, unequivocally. Why? Because our value was too high. The cost of our equity was too good to let go. Then the next step is, what about loans? Because those are the fastest ones. Anybody tells you I could get you a grant in 30, 60 days, they're usually lying, unless it's a pitch competition or a municipal or provincial grant. Most grants take a cycle of 3 months plus, and wage subsidies and tax credit. So once you've established that value, you're able to say, all right, do I go for loans? And once you go for loans, you go for the shortest interest, the Futurepreneur, the BDC, the provincial loan programs to help you get started, which are super forgiving. You go to the bank and Bay Street after that, right? And last but not least, once you do your 999, you're going to know in the first 9 days and next 9 weeks, what are the low-hanging fruits you could get in the next 3 months? And then what are the shred, which takes 366 days before you recoup even $1. The can export, which take 5 to 7 months before you even get an answer. So don't bank on, I'm going to get grants, and then you're going to run out of money, and then you're going to close your business. All right. So that would be my advice to get started. Sorry, that was a bit long, Isabel. Sorry.
No, that's okay. No, but it's also incredibly valuable, and like that's what I meant by like it is such a strategic thing to go into it, right? You know, like having a plan in place and understanding how everything works is so useful for entrepreneurs. So thank you for that. Before I forget, there was a mention of protecting IP. I think that Rachel went into. We did do a webinar on that last year, so we can of course go into it during today's session, but we like seriously went into it last year. It was like an hour and a half. So if you also would like to dig into that, my team member Tatiana can share the link in the chat for a later watch. But so Stephanie, Granted has done like incredible numbers. I think around 100 million or maybe more than $100 million in grant funding, with a super high success rate of around I think over 90%. What separates a strong application from one that gets rejected?
Well, I mean, we start with eligibility, right? So this is different from taking an exam where you go, I'm going to fill out 8 out of the 10 questions and I've got 8 right, I know. And so I've got 2 that are potentially wrong, but I'm going to leave them blank or I'm not going to really answer them completely. That's not how grant writing works. So just making sure that you're prepared and understand whether or not you are eligible. I think that's the core piece is you're not just throwing spaghetti at the wall and seeing what sticks. And then the second piece is like, if Thierry mentioned this as well, you have a business plan, you have a pathway for your business. And so then making sure that anytime you're writing a particular grant, it does need to align with what that pathway looks like. And so, adjudicators can tell immediately that this is very different from what it is that you're doing. And so we often will tell companies that we work with, like, this is actually not going to be a good fit for you. And so if they opt to go and apply on their own, that's up to them. But for us, we just want to make sure that we stick with the integrity of, there is integrity in this granting process, and it's got to be a correct fit for what the government is looking for.
Mm-hmm. Yep, I think that's such incredible. It seems so like obvious as well though to say that, but yeah, it's not as if you see that you have most of the eligibility, but you need to have every single piece that they are
But I would
that
say I would challenge that as well, in that a lot of us will self-select out thinking that we don't actually fit, when
Mm,
a lot of the times how that fits is just a creative way of how you apply your business. So don't just isolate yourself out of it because you think like you don't hit every single criteria piece, because you'd be surprised the amount of funding that will be given and the amount of funding that's there that people they can't actually deploy because they don't have enough people applying for. So also make sure to go out after it.
Can I add to this? Because what Rachel
yes,
said
please.
is
Yeah.
golden. And I'll give you a real anecdotal evidence to exactly what she said. Do not actually price yourself out of the worst case. You will now don't spend 2 weekends and miss out time with your family and go nuts over this. But if you think you could do it fairly rapidly, please try. And I'll give you a concrete example. Happily, we're the first company to win 2 years in a row the TELUS 250 grant. Why? Exactly what Rachel said. We applied in 2023. This is a true story. We won the 20K package, Samsung package. And then 2024 came around and our algorithm matched us again. We're like, no, we won last year. We can't. This might sound stupid, but literally we priced ourselves up by saying we won last year. But the algorithm said no, or our platform said no, you can apply again because it reads the eligibilities and the criterias. And it came back around. We applied again, and because we had won last year, our algorithm was fine-tuned based on the objective of TELUS that year, because it changes every year, and we won the $250,000 grant. So this is a clear example of, if we would have just done it ourselves, we would have been like, okay, we won, thanks. We can't reapply. Same thing with Can Export. I see clients all the time. I got Can Export last time. Can I? Of course you can. Of course. But if you don't know, you don't know. And that's exactly what Isabel was saying. There is so much information in the non-dilutive space. You can't get it or compact it, thanks to Pizza Hut and thanks to Startup Canada, but you can't compact it in an hour and a half. It's not possible, right? So I would say there's a myriad of resources out there. Do not miss the opportunities. It's not going to be too time consuming to just take a chance and apply again. So big shout out to Rachel for that one, because that's a huge one. People price themselves out and they'll never know what they might win the next time. Take the risk. Exactly, D.
Yeah, sorry, I
Excellent.
just
Thank
want
you.
to clarify before we go on. I mean that if somebody is not eligible, so if you need to be incorporated, they're still applying. And so I don't know if that's the best thing for them to do, because what will happen is it'll just get thrown out. So, the question that I was trying to answer really had to do with why was our success rate high? And it is looking at the details. It's, not just applying because somebody else next to you said, "Oh, yeah, I got it." Well, they might be incorporated, or they might be, fitting for that particular program. And so it's just important that everybody is reading those,
Mhm.
because the other side of things is you apply for everything under the sun and then you don't get it. And like Terry said, you're then wasting your time on something, right, that you could be spending on working on your business. So I just want to be clear about that.
No, totally. Thank you, Sophie. And also, you might run the risk of like not understand, like if like you said, like throwing spaghetti against the wall and seeing what sticks, you might not walk away from that with a better understanding of why you didn't get the funding. And you might just be like, oh, and then just get fed up with it and then never go back
And
to it
never do it
again.
again.
So
Yeah, that's
yeah,
exactly it. Yeah.
yeah. So I think it's what I'm hearing from all of you is very useful, but yes, your success rate is so high. So looking at those details and really ensuring that at the very least you have those like crucial elements. We have some great questions in the Q&A box. So I want to get to some of them that are kind of pertaining to what we're talking about right now, which is very much around, being very early stage and kind of getting your business off the ground. So Amy has asked, I don't have a full-time employee yet, but I can't afford it. Do those employee grants work for this purpose, or do you already have to have existing employees? Who would like to take it? Rachel, I see you shaking your head if you'd like to talk about it.
Yeah, I mean, I guess it depends on the different grants you're looking at, but yeah, no, I think like if you're looking to bring somebody on, there's a lot of great opportunities to get those funded through wage subsidies. Now, you like wage subsidies aren't going to cover the full salary most of the time too. So you do have to be careful about that, but you don't necessarily have to have full-time employees to bring on your first person and have those wage subsidies kick in. I think that's the purpose of some of those programs, but I'll let the other experts kind of talk about that.
Yeah, I would say that's one of the first grants that a lot of people will leverage is a wage subsidy program, usually to bring on someone who, let's say you're in architecture and you don't have time to do admin and you want to bring someone in to support you on the admin side of things. Maybe it's a part-time student to help you organize your documentation, etc. Just keep in mind that not all programs will allow you to hire someone who's high level, someone who's got 30 years of experience or 15 years of experience. It really is geared towards those. We think about how the government is using taxpayer dollars geared towards those who need a job. Maybe they've been unemployed, or maybe they're younger and so they don't have as much experience. Just make sure that you do have your payroll set up. And so when we talk about, being prepared for grants, that's one of the areas. It's just set up for your payroll account and make sure that you've got a system where you can run payroll effectively because Rachel's nodding, you need to make sure you got all your pay stubs and all of those deductions and all
Yeah.
that in place. And yeah, it's a great way to start, especially as an early stage business with zero employees.
Well said. Thank you. I see two people with their hands raised. If you'd like to ask a question, just a reminder to put it into the Q&A box. Just with the way webinars are set up, it's just myself and the speakers with camera and microphone capabilities. But Thierry, you have your hand up, so yes, please go ahead.
I just wanted to add this. If I was in your situation, I would take advantage, write this down, of the YEP program, the Youth Entrepreneurship Program, which was started by the Trudeau administration. And you would accomplish two things. Number one, you would most likely be able to hire your first employee. You could go up to $30,000 on a $60,000 salary, and that covers 50% of the actual salary itself. And you're accomplishing two things because people tend to forget this. You could leverage, and why you should leverage wage subsidies and hiring grants at the beginning. The Canadian government is never going to give tax-paying dollars if it doesn't benefit Canada. So in reality, they're giving you a grant and they're making you the main stakeholder and the fiduciary, the responsibility of creating a job because they're going to tax that job in the future. So Canadian government is not giving you money just to give you money. But why would I start with the YEP, Youth Entrepreneurship Program? Is because A, you're creating jobs in the youth, which is also a part of diversity that we tend to forget a lot. And number two, 50% of the wage subsidy will be covered, but that $30,000 actually counts as revenue in your balance sheet. People tend to forget this. So if you have no revenue, no employees, if you are going to be your company's first employees, because usually federal program, you have to have between 1 to 500 employees to kind of qualify, you could make yourself the first employee of your company and potentially apply for that YEP program. That would do two things: create a job. Now you have two employees, and then actually bring in $30,000 on your balance sheet as revenue. Now, VCs don't like that. They're not going to be like, oh, yay, you have amazing revenue. But the fact of the matter is, it is a clear and smart hack into getting access to a plethora of other opportunities by just doing it the right way and building on these hiring grants to bolster your revenue and bolster your head counts so that you could access the more important amounts later.
Brilliant.
And I'll
Thank
just
you.
add in that the YEP program is really IRAP based. And so making sure that you meet the criteria for that one. It's not all businesses that IRAP would potentially fund. So if you're a small, service-based business or restaurant or cafe, or, that's probably not going to be as applicable to you because you need to be doing innovative work.
I wanted
Oh,
to
sorry. Yeah.
Yeah, sorry, I was just going to jump in here, completely separate. I see a comment from, and I've seen this comment kind of in the chat as well, but from Rim specifically about the lack of early stage funding and, US and Europe having a lot more funding opportunities, especially at the early stage. And I feel you, I really do. It's so frustrating, especially for some of those bigger grants that you hear all this splashy news about, and all these people are getting, and they're getting millions of dollars from the government. And you look at the need for traction and revenue baseline numbers and all these things, and it just seems completely unattainable. And it's true. I mean, even our investor ecosystem is so risk adverse. They're going to be looking for all of these things as well. They're not as aggressive. So, Rim, I feel you. It is something that is a challenge. We are all scraping for these smaller grants, the provincials and the municipals, and trying to get along and far along with those things without having to go to investors. One thing I will mention is we remember that we just went through a really, really rough government cycle. We have been essentially almost 2 years plus going through losing our prime minister, about to announce a budget, didn't do the budget, lost our finance person, didn't do the budget, got a new prime minister, didn't do the budget. And so the budget's actually just been announced, and they're just starting to understand what programming looks like. And so these announcements are actually starting to come out again. So please don't give up hope. There is some hope coming down the pipeline. Like I said, these things are so cyclical, and it is something that is so up and down with governments and budgets and all these things. So you don't think that government is going to influence like your business, but it really, really does. And it's something you have to be kind of cognizant of. So keep your eyes peeled over the next little bit. I think the fall is going to be a really exciting time for some new grant announcements. So keep your eyes peeled, don't give up hope, and keep going, and enjoy the summer as well. Don't stress.
Thank you, Rachel. It is so important to have that encouragement. If someone is in the room or they're watching this recording, and they're like, okay, great, I'll keep my eyes peeled. Where are they keeping their eyes peeled? Like, where is the best place for them to be keeping in the know of these announcements?
I think that there's a range of different solutions. I'm going to start with one that I don't know that it's going to be the best, but I think it's important that we mention it because it's free and it's made by the government. It's the Business Benefits Finder.
Mhm.
So it's a website that was created in 2018, and it develops, different resources, and resources meaning not just grants, but there's other incubators, accelerators, information like that. Of course, there's a lot of tools. Rachel mentioned Pocketed, Thierry's got Happly, we've got Get Granted. I think any of those where the idea is that it pushes notifications to you so that you don't have to worry about it, right? So to Rachel's point of like enjoy the summer, well, if there's a grant program that opens up in August, you need to know that this one exists. And making sure that you're choosing an algorithm that does or a platform where it does match exactly what it is, and the accuracy of that is important as well. And then, on the cheap, it's like industry association newsletters, press releases from the government. Google will sometimes have some information. Weary of that, definitely. A lot of people are using AI, and again, weary of that as well. We're still utilizing humans in our research because there's a trust factor with the technology that we have. We can't just be like, oh, this got web scraped. Like, sure. And, the information is possibly not 100% accurate. So I think just through the years of us doing grants, the human factor is still going to be an element of that. But there's a lot of available resources out there that are free.
Beautiful. Thank you, Stephanie. Thank you, Rachel. Yeah, please go
Yeah,
ahead.
I'll jump in. I just dumped a bunch of them into the
Beautiful.
chat, as well as the Business Benefits Finder. I will give one shout out, and it's kind of a little bit like biased, but it's also not. Innovation Factory's newsletter. They do a monthly funding newsletter, and it is the best thing ever. It is just a ginormous dump of every single grant possible on the planet in Canada. And so I highly recommend subscribing to that. It's Innovation Factory out of Hamilton. And their team, like all they do is just scrape up what is new, what is ongoing. And it's just like I just go through there and just click, 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 click. If you want to connect with me and get some of that, I could forward that off to you. I have it readily available, so just let me know.
Perfect. Thanks.
Can I add something, Isabel, quick?
Yes, of course.
And I think LinkedIn. I think that anything, because now we're talking about a lot of government, but we tend to forget that there's the private sector as well. The private sector, Bay Street, Wall Street, usually, I don't know about Wall Street, but Bay Street, a lot of the big banks run their fiscal year from November to November. So usually at the end of their budget year, their fiscal year, they're going to be like, hey, we might have some money. What can we do to capture the audience, right? And they'll start a grant program with the leftover money from that budget, from the marketing or communication. So I would obviously stay very active on LinkedIn and follow the right people from the private sector as well as the public sector. It is absolutely and unequivocally important to obviously follow your provincial government, your municipal government, and your federal government. But I would also add to this a couple of private sector company that you've identified. And why November? Once again, it's either end of their fiscal year or at the beginning of their fiscal year. They want to start the year with a big bang. They'll make big announcements, and those announcements are always going to go through, yes, Newswire, but nowadays LinkedIn is the ultimate platform to announce this. And don't believe me, I'm sure Pizza Hut announced this on their LinkedIn, right? As they should. So
Yeah.
LinkedIn, I think, is also a great source of private sector non-dilutive funding opportunities.
Fantastic. Thank you. Thierry, if you have any, I just saw someone put a comment in there. If there's any that you know of, to mention them. But thank you. That's a great tip. All right, we've done a lot of discussing around finding, accessing, applying, all of that. I'd love to switch into like, okay, someone has actually gotten the funding. And Rachel, I'm gonna point to you first for this. For example, like you said that you started with a consultant before you went to Shred alone. And you've done a lot of flagging to other founders that they should be prepared to being audited, especially on their first filing. So when an audit hits, what are the CRA asking to see? What tracking habits should our founders start today so that they're not panicking during an audit?
Yeah, I mean, don't be scared. Auditors, like, they're not that scary. They will work with you. It's just something, it's just checks and balances, right? Especially when it's the first time and you're kind of popping out of nowhere. They're going, who is this person, right? So, in terms of checks and balances, one of the ways that I really supported myself in this was setting up. So I use QuickBooks for my tracking. I actually set up R&D buckets so that I can track what my shred spend would look like as I went through and spent and could push it into R&D buckets. So, um, any of your engineering, scientific background based people will be 100% claiming. So, like putting those wages into an R&D section. You can claim yourself in small percentages, and those are things that you can that's to your discretion. Track your hours as much as you possibly can. It's very like you could do rough back of the paper. I know it's like when people are salaried, it's hard to do. But it's something that just to get everybody kind of in that headspace, what I do is actually get my staff to participate in the shred with me so that they know what the expectations are on them in terms of what is being tracked and that type of thing. Materials is another, and then consultants and stuff that are all in R&D is another. So all of that stuff can be claimed towards. Make sure you keep your invoices, make sure you keep everything because they're going to want to look at all of that and they're going to want to look at job descriptions of people and what they're spending their time on, that type of thing. So But that's just for shred. I mean, it is also IRAP follows a similar format. So these are just good practices up front. Do I even do it the best way possible? No. Have I survived multiple audits? Yes. So don't worry too much about it. Don't like panic that you haven't already done it or, you're just starting now. So don't worry.
Thank you, Rachel. Appreciate that. And we have a question from Sydney Marr in the Q&A box that I think sort of fits in the realm of that. Sydney made a great point, like remembering that grants are considered income. So therefore, the recipient needs to make sure that they saved enough money to pay the income increase at the end of the year for year-end tax filing. So can we talk about the percentage to save along the way, or advice on keeping this in mind? And I'll throw it out to the room to see whoever would, if anyone's able to answer.
I think
I mean, I
that's a
can
fiscal
speak on
question.
this.
Yeah.
Oh, sorry, go ahead, Terry.
No, sorry, go ahead, Stephanie. I just think that's a fiscal and accounting question. I'm not personally comfortable answering it, but yeah.
Yeah, I actually was just going to say, speak to your accountant about it, because obviously everybody's in a different tax bracket. You might have the small business deduction. And so it does depend on kind of it's not that you get taxed any necessarily more than what would be considered revenues, but it is considered a line in your revenues. So to just be aware of that. Now, if you are still not profitable, then this deduction could be potentially something that sorry, there might not be as big of a tax implication there, but definitely speak to your accountant about it.
Mhm. Thank you. Appreciate it, Sydney. I hope that helps. So for Rachel and Thierry, hold on, let me just do a quick time test. Okay, we've got about 11 or 12 minutes left of questions. So I will do my best to get through what we have, as well as looking at our attendee questions as well. So we've talked a little bit about Shred, and Rachel mentioned IRAP. So Thierry, I know that you have some experience with IRAP. So I'll point this question to you. It seems like a bit of a mystical thing to get into to begin with, and it really starts off with an advisor referral. Can you talk about
Yeah.
getting into IRAP, and then what strategies what strategies a founder can take on getting onto their radar?
Yeah, great question. And just so everybody's situated, Rachel touched on it, Stephanie's touched on it, I've touched on it. I think we can all agree that if you are in technology mainly, and I know not everybody is, but if there's an innovative component or technological component to your business, Shred is a must. It is the Canadian government strategy to actually attract to do brain drainage, attract people to Canada, and more importantly, retain people in Canada. And what it does essentially is any wage subsidies that can be proven to have been spent on research and development, and more importantly, technical uncertainties. That's also a very common mistake people make. They think, well, I solved the problem. Shred and IRAP don't like that. The government actually does not want you to, if you solve the problem, then it's no longer a technical uncertainty. So be very aware of that. We sometimes will show up in meetings, and we did it. Hey, we proudly solutioned this. Now we're commercializing it. Well, if your solution didn't commercialize it, is it really R&D? Can you really continuously still dive into this? For us, it was smart matching. Stephanie touched on it. Not having a human in the loop that is knowledgeable about this means that you have to have an algorithm that is extremely powerful in the way it's going to leverage OCR and LP and computer vision to go through each criteria, each opportunity, so that you don't match with BS. We actually leverage smart matching and the Shred government reimbursement to actually process and build this engine into what it is today. Now, here's the difference between Shred and IRAP and why it's super important. Shred is a Canadian right. That's what we like to say at Happly. You have the right to Shred. It is you could file a T2, have your technical uncertainties that you've solved for and are indeed for attached to, that's your accountant that's going to file it for you, but you have to produce it from your JIRA or wherever your epics are told about the technology and the uncertainties you're solving. Like Rachel said, you have to track your hours. You don't have to be perfect. you have to do some kind of tracking, right? And then once you submit this, you're going to get your money at the end. It's retroactive. The beauty with IRAP is it's retroactive, but instead of taking 365 plus days before you get that money back, you get it every month. That's why IRAP is not just competitive, it is the ultimate funding engine, in my personal opinion, speaking from my personal experience and the experience of our users. Why? Because there are 200 IRAP federal funding scouting agents across Canada, and it's an invite-only club. It is not a right. They actually will tell you it is a privilege to get IRAP because they identify companies that have high scaling potential to benefit Canada in terms of creation of IP, of innovation. And then they assign to you a manager that is with you for the duration of your life. People don't know this. So contrary to submitting to SHRED, waiting 365 days, praying that you don't get audited, and if you do get audited, meeting a business stranger that is going to go through your fiscal stuff and accounting stuff, or a PhD that's going to go through your technical stuff, right? You don't have a relationship with these folks. The beauty with IRAP is once you are selected and you are in the club, you build that relationship with that IRAP manager, and his job is to deploy funding. He gets yearly budgets that he has to deploy with specific companies. Now, here's a strategy I'll give to get into IRAP because it is so tough to get in. It is super competitive. You have to have some form of traction or not necessarily revenue. LOIs, people that are saying, we will do this. You have to have a sales pipeline also. People think you absolutely need revenue. It is not true. You have to have traction, which is in the form of cash or pilot or promise LOIs in revenue. And then you have to have a pathway to making money, right? And the strategy is to start with YEP. Why? Because YEP, we talked about Youth Entrepreneurship Program, is ran through IRAP. So instead of waiting for them to find you and pick you, if you start with YEP, it is a right for you as a startup to go through YEP. It is automatically going to be assigned to an IRAP manager that is local. So even if you've never met him, you're going to skip the barrier of the mean guy, the bouncer at the club, and you're going to get inside the club. Once you're inside that club, fulfill the YEP properly, make sure your reporting is mint, and build that relationship with that IRAP person to do what's called the mini IRAP afterward, which is 75K and below, and is in direct relationship with the same person that treated your YEP file. So that would be my hack and to getting into this. And the advantage, once again, is you don't have to spend the money and get it back. You just have to hold it for 30 days. You could go get a futurpreneur loan. They actually account for that in your business projection. Capture that loan to make sure you have the proper cash flow to pay yourself, pay your first employee, pay that YEP, and then at the end of the 15 days after the 30 days, so 45-day cycle, they reimburse you specifically for YEP, the first $30,000 on that employee. On the mini IRAP, they will support you up to anywhere between 40% of the wage that you pay, and it could go all the way to 80%, depending on the build and the case that you've built. Sorry, for me, IRAP is like the ultimate because it's SHRED on steroids and it reimburses your cash flow a lot sooner and a lot faster instead of you having to wait all this time. So YEP first and then mini IRAP, very important. Don't get too greedy, stay below 75. It is the manager that approves it or denies it. If you go above 75, it has to go to a third tier committee that has to review, and it gets a lot more complex after that.
And you can always go for it later. So it's like it can start at 75. The next year,
Exactly,
like
Rachel.
I think we started at 50. We went to
There
150.
you go.
Now we're well into 250 plus. So, and it once again, you need to wine and dine, love up on your on your
Thank you, Rachel.
I think they're called CTAs
ITAs,
or
ITAs.
ITAs. Yes, ITAs. The best way to find your ITA is actually to go through one of your local regional innovation centers, connect with them, and then they can connect you directly. Don't call the IRAP hotline.
Nope.
It's just going to hang up on you. It's not useful whatsoever. So, yes, ITAs, ITA. Yep.
Excellent. Thank you. Some fantastic nuggets there. Thank you, Thierry and Rachel. So we're getting close to being finished. If there is any burning question that you have, please put it into the Q&A box. and I'll do my best to fit it in. Or we can always do a follow-up as well. So we've talked, well, I feel like we've hit on so much, but I feel like we could also go for another couple of hours. So I'm really trying to ensure that we're like wrapping this up in a thoughtful way. So there's been a lot of talk today from each of you around being reimbursed or being like retroactive payment for a lot of these. Is there any tips from any of you on what if a company is completely pre-revenue or they've got a pretty small annual revenue, what options do they have to bridge that cash flow gap while waiting for grant money to land? Like, is it going after a loan that's gonna help them out, or is there other ways? Like, I know there's a lot of options. So, Stephanie, maybe first, like, is this a question that you get asked? And if so, how do you?
Yeah, so I'm not as familiar with these, but Rachel had mentioned Swoop, and so I think with Shred, I think there's different types of organizations that will give you a loan. Usually it's a higher rate than what you would get from the banks. And so just be careful of that. And so they understand that you're doing something innovative. But for the general business, which might not be high tech on this call today, the loan programs, the Canadian Small Business Financing Program is one that I would recommend, especially if you are investing in something that's a little bit more tangible. So buying equipment, et cetera. That loan program, 80% of that is offset through a guarantee from the government. Again, they take second position. So what that means is like they will come after you first. If you still don't have the money, then they'll go after the government and it covers that 80%. But loans are definitely one way. I mean, I think that the reality is that there's always a risk with these grants where if you're applying for something, let's say you're applying for multiple different programs, and you're like, I'll just see which ones I can go after. You could put yourself in a little bit of a cash flow bind. So this is one of the things that we talk about with our clients is making sure that they are like, does it make sense to go after this program? And then maybe, in the middle of this program, we go after this one and just making sure that that cash flow is being cared for. Because the last thing you want to do is like tie everything up so it's all in grants and then you don't have operating cash flow to kind of manage your day to day. So just be conscious of that. Yeah, I would say, different banks will have different loan programs. Those may also be specific to equity deserving groups. So I know in Vancouver here, there's Van City, they have a program specific for women. BDC has a program specific for women. The one point of caution I would say is just be really careful about understanding the interest rates because there might be another program that might give you more favorable terms. And so just please make sure that you're not paying, 18% on something when there might be a program that's available out there where you're doing prime plus 3% or something like that.
Mm.
And also be careful of personal guarantees. I just want to add this because I hear
Yeah.
stories all the time. Unfortunately, most loan programs, even government loan programs, will ask for personal guarantees except for CED. But CED is for much later stage company. But I agree. At the beginning, we started with a loan project, made sure we were able to pay ourselves, and then we went after wage subsidies, got our first shred, reimbursed part of the loan, and then build it up that way until we got into IRAP. And now things are a lot more efficient on the cash flow perspective. And also when you start to apply, fellas, ladies, everybody, you learn about your business. So the more applications you do, they're going to ask you questions. You're like, what the hell is this? Guess what? You're going to have to do the research. You're going to have to explore yourself and navigate. So I think the non-dilutive strategy also is so crucial because it is it's a baked in GPS strategy for you to learn the ins and outs of the ecosystem and also learn about you as a person, your bandwidth to take it, your mental health, because you have to protect that, and more importantly, what's out there. And you're going to answer a question for TELUS. And then you're going to say, oh, wow, the Canadian government actually asks the same question. So next thing you know, you got yourself a couple of different pitch, a couple of different application strategies, and you're good to go. So I just wanted to add that.
Thanks, Thierry. And Rachel, please, yeah.
I'll jump in. So, I think it's a dance, right? It's very much managing cash flow at the beginning, and really at the beginning, like, what is cash flow? You're kind of just like figuring it out as you're going, and like you have to spend for something and you're like, okay, well, I guess I'll just hold off on that until I've got a grant. So, you're kind of playing this dance the whole entire time. I would say don't commit yourself to like payroll and stuff until you have a really good chunk of money in the bank. And you're able to actually cover yourself for that. Everything else is really just like you're trying to make it work and you're scraping along, and milestones will probably push out because you're like waiting for this money to hit and you can't do anything. And so it's really just this song and dance. And to be honest with you, not until we raised our first round of investor funding did we have that security. And even then, bridging between two rounds of investor funding has been song and dance of having grants and having what we can to be able to get us across. So you just kind of like adapt your business as you go, as you have things coming in. That's why I say apply, 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 because then you have a steady amount of money coming in that you can start to plan for that year. I know there was some talk in the loans. So we are still pre-revenue. We are 6 years in, burning about 1.5 million a year. So like we still don't have revenue, but we are a deep tech company. So like, we had to use grants. We had to go out and use investors and that type of thing. It's like revenue and med tech is like, what is revenue?
Exactly.
So it is possible to continue on and survive and have a thriving business without that revenue up until the point where you are able to execute. So for my deep tech founders in the group, loans for us have been almost near impossible. Our bank is like, get away from me. Like, I don't want to talk to you ever. Like, you're gross. I don't. So banks will not talk to us. So like loans, be weary. Like if you do have to put that personal guarantee, that's the biggest thing. And those interest rates can kill you. We have honestly had like very, very small loans. So don't guarantee on that. And I shouldn't say this on the record, but just avoid BDC. Like they're not going to give you money.
Hey,
And like and they're just, I don't know. And they look for personal guarantees. And there's so many people who have done that and it really bit them in the butt later on. So just be weary.
that
Thank
is
Yeah.
you.
facts.
No, I
Sorry, it
appreciate
is.
the candor and honestly it's nice to have some kind of conversation and yeah, I appreciate that. So thank you. Before I switch it back to Wise, I'm going to go ahead and launch because it's so important for us to get feedback on our webinars from our wonderful attendees who have spent so much time today with us. So Wise, I've gone ahead and just launched that for us. Thierry, Rachel, Stephanie, thank you so much. I enjoyed this thoroughly. I learned a lot today as well. I love doing these. I get to learn so much as well to help us and my team to support entrepreneurs. Wise, I'm going to pass it back to you to do our closing remarks and let people know what we've got going on.
Awesome. Thank you so much, Isabel, for moderating such an amazing, fruitful conversation today. Really happy with some of the important points that we covered in the time that we had. But that is all the time that we have for today's conversation. This recording will be available on our YouTube channel afterwards as a living resource, so you'll have it available to all of our attendees. Before you leave, as Isabel said, we've launched a quick feedback poll, so we'd greatly appreciate if you could complete this before you leave. I'd like to take a moment to thank our co-presenting partners, Pizza Hut Equal Slice, for their generous support with this program and for their commitment to supporting equity-deserving entrepreneurs. We are hosting our next webinar of the Startup Canada Equal Slice 2026 program on September 1 on a very important topic, scaling your idea from concept to market. We'll share the registration link in the chat for more information. But yeah, that is all the time that we have today. We'll keep the room open for a little bit to give the attendees a chance to fill out the poll, but we'll let our speakers go. Thank you so much again, Thierry, Stephanie, and Rachel, for your time today. I'm sure that the audience learned so much from your valuable insights, and we really, really thank you for your time. Thanks again, and I hope you have a great rest of your week.
Take care, everybody.
Thanks,
Stay
everyone.
highly favored. Bye.